All right. So, we are going to be going over key levels, support and resistance. The key levels are support and resistances. But I'm going to go over how I draw all my key levels, like where I get them from, why I choose a certain level, what time frames, all that stuff. We'll go over everything in here today. So with key levels, there's typically a few things I look for. Is it has to, either the body or the wick of the candle has to touch at least, I would like at least 2 to 3 times. Two would be like the absolute bare minimum, right? Anything over two, and you know that it's a strong level, right? So I would start off on a monthly time frame, right? So you want to start off with the largest time frame available to you, because your larger time frame key levels, or your levels taken from a large time frame, are going to be more prominent than something you might get from an intraday time frame, right? So a level that you find on a monthly chart is going to be, you'll notice how it's a lot more relevant and a lot more prominent than something you're going to find on a 15-minute or like a 30-minute chart, right? So like right off the bat, we're on Apple's chart here. We can identify this level. Hold on, somebody's echoing. Who is that? All right. Anyway, so reason I picked this level here, if it's not clear already, is because of these wicks here, right? So we can see that all these wicks, they're unable to close this candle above, right? And then the way this level gets its confirmation is on the retest, right? So it's like a very classic level break, right? You get the use of resistance here. You break through, you come back down, and you retest and continue up, right? And now we're just going right through it, right? So you have this level here. I would do probably something like this for the bodies, because of how they were unable to close above. Levels like this you can always readjust later on, right? So this one down here, we could have did this to these bodies since they were unable to close up top, but we got the confirmation on this support, so obviously we go with this 138.27 over what we had previously. So we'll do this up here, and then something like this down here. Because of these candles down here, we're using it as support. Oftentimes you'll see if one of these levels that you pick falls as a psych level, so this is going to be like your whole numbers, like 140, 141, 142, etc. Your psych levels are going to be really important as well. So for Apple, like 180 was huge, right? 170, 160, like all these levels, they're going to be pretty big. All your psych levels, you'll notice. So from the monthly, this is pretty much all I'm seeing as far as our relevant range in here. Then you drop down to a weekly. Here's where you will see if the levels you picked off your monthly are good or not, because they're going to translate over and you'll be able to see them on a smaller time frame. All right, so we have that. And I like this one as well, so we use it as resistance here. You get the rejection, right? And then here's your classic support, or sorry, your resistance break, and then use of support right here, right? And then we're using it as support here too. This was our resistance we got from the monthly chart up here. You can see how that worked out for us. And a continuation down, right? And then you can drop down to a daily from here. Here's where you'll really get most of your levels, your stronger levels at least. You'll get them from here. All right. So boom, right there. So I got that from these right here. So we get 1, 2 touches right here. All right. We get a breakthrough right here, and then we're using it as resistance once again here. So you have multiple touches here. We're using it as support here. And then check this out down here, how this entire drop happens, and where do we bounce at? So our level from that we got previously from back there, right? And it just so happens to be 150, which is the psych level that I was just telling you guys about earlier, right? So you see how these psych levels have some importance now. We'll do that down there. So we see the support that's being held through here, right? Down there, you see the resistance over here. And the thing is, if you get these levels from either a daily, anything above a daily, really, you can keep these on your chart forever. You know, like if you get the right levels, and you don't mess up the first time around, you can really just keep these on your chart forever. And I'll do an example later on with a different stock. Well, I'll literally just hide this recent price action. I'll go further back and I'll draw out some levels, and you guys will see how they're being respected even later on. Oh, 1K's in here. What's up, 1K? When you're trading during the day, do you need to have these levels pre-drawn up? Otherwise, how do you know that it's a new level that you could use as an entry point for a trade? So when I'm trading during the day, I usually use the levels that I already have drawn out, or you'll find levels from the previous day. Your immediate, like, your best levels, like right away, without a doubt, is going to be your previous day low, previous day high, right? So let me do this real quick. So this is your previous day low. Here's your previous day high, right? So you can mark these, and these are immediately going to act as some sort of support or resistance. A lot of people just play breakouts off previous days lows and highs alone and nothing else, which is effective, but you want to have a little more, so you have some type of confluence and something going on. So like for example, right here, you can see how we developed a little support right here on Apple, right? So let me get rid of these so you can see how we have 1, 2, 3, 4, right? We have a bunch of touches through here, so you can see that we have a solid support. And what happens the next day, right? What happens today? We open up right at our resistance, right? So this is an easy short. Comes back down, comes up, right? And you're at your resistance once again, so you short again, right? Right back down. And then you get this candle that closes over, but yet still a bearish candle, and another move down. So we really just didn't break this previous support, now resistance. We didn't break it all day, this 133.13 level, right? So you know that there's a lot of sellers sitting up here based off this price action alone. This rejection here, this rejection here, this candle shows me that buyers were strong enough to get it over, but sellers were even stronger because they got it over, but then sellers brought it right back down, right? And then this rejection here. So you're seeing a lot of rejections. Even towards the end of day, we saw our rejection there. So for tomorrow, this is a level that you have instantly, right? Because of the previous day and today, right? So you can see how it's a pretty good level. So tomorrow you can either play the break or you can play a rejection, right? Whichever way you play it. I'll get into like how I actually play levels once you chart them out. But yeah, so that's how I would do it intraday. All right, so we collected a bunch of levels here from our daily time frame. Actually, this is a really good one. I like that. We got that from this touch here. If we scroll back, I'm sure we find some more. Yeah, look at the resistance there, resistance through here, and big bounce right off that level on the 20th. So now I'll start dropping down to intraday time frames, right? So here's, I won't really go to a 4 hour because your daily and 4 hour look very similar. So it'll almost be the same thing. But here I'll drop down to an hourly. Right now you're dropping down into those intraday time frames. So here you're going to find these levels are obviously they're going to work, but these levels that we have that you see on here, we're taking from super large time frames. So these are like your big key levels. What I used to do was I used to like color code them so that I could understand better. So if I got a level from a monthly, I would color it green. If I got a level from the weekly, I would color it yellow, and so on and so forth, right? So you have that, and then now on your hourly, now you can grab some intraday levels. So like this right here. So we see the support here, we see resistance here, and then we see support here once again, right? So if we come up to this area, you know, we have this range to work within. Obviously we have this level down here. This was the low of today and yesterday. This is that region. So you can see we have 3 touches between 2 days alone on this level here at 131.44. So that's pretty big. Immediately your gap fill level becomes a level or a big resistance, because if anything, if there's sellers at all present, they're not going to want this gap to get filled, right? So that's going to act as a resistance there. You can see here how this previous support, so you can either take it from the bodies of these candles, or you can take it from this wick, or you could take it from this one. This is the end of your gap fill, right? At 137.12. So this would be our target if we were to break this level. So that's how you use them, right? Is if you break one level, then you go target the next, and then you break one, and then you target the next, and so on and so forth. So that was our hourly. Now you can drop down to a 30-minute, confirm those levels. Usually I don't really grab much from the 30-minute. It's mostly from the hourly. And now at this point, I'll drop down to a 15. 15 is the absolute lowest time frame that I will go to grab any levels at all. Nothing lower than 15 for me. And over here, you're going to get your intraday levels. These are going to be like the one that we got earlier, the support level right here, right? So this is where you're going to grab these levels. Now tomorrow, so if we were to break this, right, we can target this. Then maybe a rejection, and then back up, right? So that is how you do it. And then now how you play these levels is even simpler. So there's a couple ways to go about playing them. So I usually drop down to a 5-minute time frame, and what I'll do is there's the first way to play these on a 5-minute time frame is wait for a 5-minute close over or under your level, and then take long or short, right? So for example, where's the path? There we go. So for example, this is our level here. This is the one that we're talking about right now. And you get this break over, right? As soon as you get a close over, this is going to be your confirmation. This is your entry, right? Your close over is your entry. Now, in some cases though, like this one where you have to kind of look at several other things, and it can be a little overwhelming. So this is why I'm going to tell you guys the second way to play these. But sometimes it'll close over, but yet still go right back down, right? So the way you would play this is a close over is your entry, and you're not going to stop out until you get it closed below, right? So this is your entry, this is your stop, right? You're fully stopped out. As soon as the candle closes below, you're stopped out. That's it. Now, the second way you can play this is a retest of your level. So an example of that, it would look a bit like this. If this one went the way we would have wanted it to for longs, it would have went over, it would have came down, retested, and then went, right? Obviously, it's not what happened, but this is the safest way to play your levels, is wait for the retest. Sometimes there's a lot of momentum. Sometimes it won't even come back down to retest, but without having solid rules, you're not really going to get anywhere in trading. So these are rules that you need to set for yourself, right? And make sure that you obey them no matter what. But here's an example of a level break where we came back and got a retest. So this was the level break right here. We got the level break right there. And we went up. Didn't even get a retest here. Went up. This is the retest right here, right? So this is your long. And this is your highest probability long because of the way that it's set up. Is your stop loss would be like almost directly below as soon as the candle closes, and your target would be whatever previous high or whatever resistance that you're targeting or whatever it may be, right? In this case, it stopped right there, but this alone right here was a 1 to 7 risk to reward, right? So this is super high probability because of the way that your stop loss is placed and where your price target is. And so you can long this right here and back up, right? And then your stop loss on this would be as soon as you get a close below. So you can take off partials as you continue to go up, but a full stop loss out of all positions, or out of your entire position, would be as soon as you get a 5-minute close below or above. That's when you're like completely out of your position. Any questions so far? You guys can type or talk if you're not muted. Gotta have patience and no FOMO when playing the breakout. Yeah. I mean, you can't have FOMO, like, period. Because that's when, like, as soon as you think that there's not going to be a pullback and you should just get in, you're going to, boom, like, you're going to get the pullback. It's going to hit you out of nowhere, right? And it happens all the time. I see it happen, like, 24/7. You know, that's just the way it goes. But you have to have a plan in place, right? Without a plan, you're not going to be able to execute a trade properly. So if you have a plan, like, so there needs to be a system in place for you to enter a trade in the first place, right? So levels is just one step. There still needs to be more work that needs to be done, right? So you have to have an entire system in place that's like, okay, so we break this level, then I'm going to enter my trade. This and this and this and this and this needs to happen in order for me to enter this trade. This is how I'm going to manage it. This is how I'm going to, like, you know, everything has to be in place, right? So the trade that I just showed you guys, let's say, for example, if we were to take this trade right here on this level bounce, right? Here's what it would look like for me. So I'm taking it right here. My stop loss is directly below. As soon as we get a 5-minute close below, I'm stopped out. All right, my target is going to be my previous high, right, or this level up here, and I'm going to take partials off on my way up. And as soon as you get a 5-minute close below, I'm stopped out. So notice how everything is in place, right? There's no questions about what's going to happen at what level. Like, we know everything. We know when we're taking partials, right? This is our immediate swing high up here. Like, this is our immediate high. So this is going to be your first and initial target, is to get past this swing high. All right, so this would be our first one. We take partials here, and then you can really just do whatever the hell you want with the trade. Take partials whenever you want, right? So we're gonna do partials right there. We'll do partials at this high, partials at this high, and I'll keep some runners and keep them with a stop loss at break even, right? And as soon as you get a 5-minute close below, I'm stopped out. So what question is there in this trade that's, like, not answered? Everything's answered, right? Nothing is left unanswered now. So
quick question. What would you do in a situation where you'll get a wick to the downside? Would you get stopped out, or you'll wait till that 5-minute closes completely?
No, I'll wait till the 5-minute closes completely. Because look at this. Check this out right here. Back here. So you get a pullback down to this level, right? This candle went below, it wicked below, right? But it came right back up, and then you got this retest and it went up. So you need to have that plan in place. Like if your rules say 5-minute close below, then you need to respect 5-minute close below, right? If it wicks below, then and you stop out because it wicked below and you didn't follow your plan, then that's on you, right? But this, like, the risk to reward is there for me personally. Even if this was to wick down, like even if it wicked down to here, right, like the risk to reward is still there. Like with a stop loss down to your previous level, it's still almost a 1 to 7 risk to reward. So this makes sense, right? This is like a no-brainer trade. Anybody would take this. And then check out what happens, right? You get a move up, you take off your partials here, take off partials here, take off partials here, whatever. And then your stop loss on your remainders is on a 5-minute close below. And this also wicks, so you're not stopped out yet. Boom, right here. This is your stop out candle. This candle here, you gotta close below. So that's it, you're done, right? And it really is that simple. Right, trade has been planned out. Everything was in place. No question left unanswered. No question about like where I'm scaling. No question about where I'm stopping out. There was no questions at all. Everything was in place. Right. So we had a plan. Right. Without a plan, without knowing, there's a big difference between having like everything that I just told you guys, having that there, and being like, okay, I think it's going to go up here, or all right, it's at my level, but I don't really know. I'm just going to trim whenever I feel like it, and I'm just going to stop out at like negative 20%, I guess. You know, like there's a big difference between those two trades, right? One has conviction in his trade, one has confidence in his trade. He knows he has everything in place. Everything is in place. There's nothing left unanswered. And the other is just kind of winging it. It might work for him, it might not. You know, he might get lucky. It is what it is. So you have to decide which one are you gonna be? Are you gonna be the man with the plan, or are you just gonna fucking take a random trade and just hope for the best? Because we all know people that, you know, they just see like SPY is down like $2 on the day, so yeah, no brainer, just pick up some calls. No, it doesn't work that way, right? You need to have a plan. Because without a plan, you're not going to be able to hold your trade. You're not going to be able to cut at the right time. You know, nothing is going to go in your favor. And if it does, I promise you, it's all luck. So you have to have a plan. Is the moral of the story. Any other questions? That was a good question there. Anything else?
What are your thoughts tomorrow on SPY? Like, do you got any highs that you see that we could head towards before, you know, or the lows? Just a quick recap. You could think which thinks what's gonna happen.
So I think, I mean, we're still just making lower lows and lower highs, like pretty consistently. So the trend is really clear. It's just everything kind of looks ready for a move up of some sort. So this little downtrend that we have is, if this gets invalidated or this gets broken here, then we can most definitely go back up to the high. And my targets for highs obviously would be your previous high right there, and then you have the entire gap fill. So I would use this as my target, and then I would have this as a target, right? And then this as a target. These are really easy just because of the gaps, the way they are. But other than that, and then I would make levels through here. So this is a really solid level right there. You can see that, right? And then probably I'd do something like that right there. Oh, that's perfect. Look at that, 416, right? So psych level. Oh, look at this, 407 psych level. All right. So we have that. They're really, as far as downside levels go, you're gonna have to go pretty far back, because we are at like session lows right now. So this right here is a weekly low, or a weekly level that we have here. We'll call it 369 because it coincides with a psych level. So we have resistance here, support here, and then that is where we just bounced from. The daily looks horrible. So overall, the setup is just trash. It looks like shit all over the board. But you know, things don't really just go straight down. You know, so at some point, I am expecting a pullback. Whether that's tomorrow or not is up to the market. But we'll see. For now, here's what I see in this. I have this little downtrend, and as soon as this downtrend breaks, I might be interested in picking up some calls. But until then, I definitely wouldn't be interested in playing long side anytime soon. You can see their time frame continuity as far as your higher time frames are all down. So the premium people, they know about, we went over the strat, so you guys know about time frame continuity and that entire concept. And we don't, your higher probability trades are going to come when you are trading with time frame continuity, not against, right? So yeah, I think any short play for now is probably way higher probability than a long play. But like I said, things don't just go straight down, they go up as well. So we'll see.
When you say break even on a runner, is that like your entry point?
I heard break even on a runner.
Break even on a runner. Oh my bad. Can you hear me now?
I hear you, but it's just super muffled.
My bad. Okay, how about now?
There you go.
All right. So when you say break even on a runner, do you mean like put a stop loss on the entry price or like 10% or something like that?
It really is up to you. You know, at that point, once you've executed your trade to where most of your size is off the table, it's completely up to you what you want to do with like the 1 or 2 contracts that you have remaining, because whether those stop out at break even or whether they go negative 100%, you'll be green on the trade regardless, right? It's just how much do you really want to give up of your profits. Most of the times I put my stop loss on my runners at break even, just because I don't feel like letting them go like any further than that. You know, that's just personal preference, really. Some people, they want to keep it like negative 10%. Some people keep it at 10%. Some people have a trailing stop where it just follows your contract price, and when your trailing stop hits, it hits. But yeah, it really is personal preference. I just put them at break even, and once they hit, I'm out.
All right, bet. Thank you.
Yep.
Key, could you talk about the first trade today? I was trying to figure out the I know it didn't work out, but I was curious why you chose that particular trade.
So let me pull up my other chart for this. This is a play I took based off.
This comes back into risk management, but like if you're a small account grower, don't aim for dollar amounts. Try to aim for incrementals of like percent wise. Just try to think about it as if you're starting with a of $100 account and a $10,000 account. If you aim for 10% a day, if you're trading with a $10,000 account, that's $1,000 a day. Just try to focus on percent wise and not money wise. It'll help a lot if you look at it that way. That's what I've learned.
Right. No, absolutely, dude. 100%. I think even for larger accounts, being focused so much on that dollar amount is really going to mess you up in the end, because we just had our last class we did on Saturday or Sunday night was on psychology. So I went over this a little bit where, you know, the days that I went in personally, where I was focused on a certain dollar amount for whatever reason, I wanted to make a certain amount that day or a certain amount this day, I would always, those were the days that would always be my losers, right? Because you're sitting there and you're watching this trade, and let's say you're up $950 and you're like, oh my God, I just wanted to 50 more bucks. It'll hit 1,000 and then I'll be out. Right. And those are the trades that are going to go red on you, and you're going to let them go red too, because you just want that $50 so bad that you'll let it go negative $800 just hoping it'll come back. Right. And that's just the way it works. So yeah, 100%. I don't think you should focus on dollar amount at all, ever. So, first trade that I took today, 10:07 a.m. was, where is it at? 10:07.
Was it a 380 spy call? I'm trying to remember. I don't remember either.
Yeah, it was this right here. So, this was a pretty stupid trade, to be honest with you. So we had a fair value gap right here from this high to this low. So I was anticipating a bounce off that fair value. Actually, I think I was down in time frame.
What time frame is this?
This is a 2 minute. I was watching this fair value gap here. So I entered them around this area here, expecting a bounce of some sort by the end of this fair value gap. So I was expecting it to get filled and then a bounce up, because we had a market structure break on a shorter time frame, right? Market structure was broken right here, and then it was broken again right here. So we had two swing highs that got taken out, so I'm expecting fair value gap to hold. But
that's it. That's actually helpful. What you showed, the preceding price action, it could have gone our way on that from the breakouts. Now I see what you were thinking, because I couldn't get it before.
Yeah, for this trade?
Yeah.
Yeah.
I see what you were thinking before. I just looked at it and the moving averages weren't supporting it. And there was something else I looked at, just wasn't supporting it. And I go, all right, he's got some logic. He doesn't just do these things from the hip. So that's why I wanted to ask you about it.
Right. Yeah. So yeah, that's pretty much what it was. I mean, the setup was there. On a smaller time frame, on a 2 minute time frame, which is the one I was watching at the time, we had the market structure break, we had the fair value gap there, we had this bounce out of your fair value gap. So at some point, it looked like a solid setup, right? To me, it was a good setup anyway, just because the risk to reward this is what it looked like in real time. So my entry was right around here, stop loss would be just below, and then this would be like, these were my targets, right? Your previous high would be a target. You could even extend this down a little bit. Still a 1 to 2 risk to reward. So the setup was there, but with our entries and with the contracts being a day out, we only took a negative 8% loss. So it wasn't anything crazy.
Would it worked to just like your logic of sometimes you reclaim a level, right? Would it have worked to reclaim that? What do you call it? Fair market, or the
fair value
gap? Fair value gap. Does your thought process ever go, okay, I'm going to make sure it gets back above this closes above the fair value gap before I hop in? Or no, that's not the way it works.
No, because when the way the fair value gap concept works is, once it's filled, because your fair value gap is just an imbalance. It's a price imbalance. It's what it is there's, on this move up, right, from this entire candle, it was so fast that it left this gap in between, right? And what this gap is unfilled orders sitting here. So this entire candle, through this gap, there's unfilled orders that are sitting here. So what the concept is when it makes a pullback to this area, these orders get filled and you make a move back out of the area, right? So the thing is, once those orders get filled, there's nothing there anymore, right? There's no imbalance. So that just gets deleted and you find a new fair value gap or some type, like there's going to be something else that forms there. If that's a stronger area, you'll have either a brand new fair value gap that the imbalance hasn't been filled, or in this case, check this out. In this case, we had an order block. So this is a 2-minute order block right here. You can see that. This candle, right? And what happens, we come down, we come back up right into the order block, and look at the short there, right? So
how did you know it's an order block?
Off this candle right here. So your order block is literally just it's like, think of it as supply and demand. You know how we pick a candle just before a large move occurs. This is the same concept as you're picking your candle just before your large move occurs. So this candle here, right? You want to go with like higher probability order blocks. This is an order block here.
How do you differentiate? To me, I don't see how I differentiate that from the price action of another candle. I mean, I get it that they're strategically excellent places to enter, but I wouldn't be able at this point to pick that out from other candles' price action. And if this is taking you off topic, that's cool. I can ask you another time.
No. Look. So I guess the best way to explain. Okay. All right. So do you see the difference between this candle compared to the rest in this immediate area? This candle right here in the middle, right? Do you see the difference between this candle here and ones in the immediate area? Or look at this candle and what follows directly after, right? That's what I want. Look at like the candle, the 1 or 2 candles that follow directly after. Look at this one. All right. Look at this one. Look at this one.
Right.
Look at this one. And then look at this one, right? So all these candles, the reasons that all these candles that I just pointed out to you, look at the candles that follow them. They're all like large moves right out of that area, right?
Yeah.
This candle is followed by a large move. This candle is followed by a large move down. This candle is followed by a large move down. Right? This candle is followed by a large move down. This one is followed by a large move down. So all of these then now act as order blocks. Does that answer your question like a little bit?
Yeah. I need to get more training.
It's obviously you're gonna have to put some more screen time in for it. I won't be able to like drill this into your head just by showing you. You're gonna have to put it into play and like actually figure them out and look at it on your own chart and start spotting them.
Sometimes, like if it's a doji or a shooting star or something like that, you can spot that by the shape of the candle. But one of those, the first one that you were talking about, it didn't look like any specific kind of that one.
This one?
Yeah, that guy there. I mean, it's kind of a okay. It could have done it could have easily gone the other way from the shape of that candle. It seems to me. Would you by seeing that candle? Do you know that puppy's going lower or no? It could have also gone up?
No, so this is something that you would mark down as an order block, like as you're trending down, right? So like as this move is happening, you're identifying these order blocks, right?
Yeah.
And once you're not like trading these right then and there, you're waiting for a move back up into that area to then take short, because this is are you familiar with the concept of like rally base rally or drop base drop, right? That's how supply and demand zones are formed, right? Where you have a rally and then you have a consolidation and then you have another rally. Like it'll look like this. I've
never used those expressions before, but it makes sense.
So this is how it'll work, right? You get a rally, then you get a base, and then you get a rally again, right? Inversely, you get a drop, you get a base, and then you get a drop again, right? You're familiar with patterns like this. That you see this all the time. So what happens is 9 times out of 10, there's an order block within these consolidation areas, right? Or a supply and demand zone. So this is
it's a pullback. It can consolidate, or is it also the pullback is also considered a consolidation?
Yeah, the pullback is 9 times out of 10 the pullback is the consolidation, unless it's like a stronger unless you're looking at a trend like, why does this keep fucking switching over? Unless it's something like this, then there's not really much you can do with that. But this setup that I just showed, like this would be perfect, right? This is what you're looking for. And the setup here would be for short side. So this is exactly what we were watching. We were watching a drop base. So drop base, you find your order block here, and then you make a move back up into the area. You short it there, and then it comes back down. Right.
But looking at your price action of these charts, there wasn't a lot of basing. Do you think it was mostly up, pull back, up, or sell off?
So no, there isn't a lot of basing here because this is only a 2-minute chart.
Okay.
But the concept still works the same way. This candle will still act as an order block because this is your only green candle in your sea of red right here, and it just so happens to be in your drop, base, drop, right? So this candle is also an order block.
Okay,
right?
That's helpful. Yeah.
So you'll be able to identify these as you're putting in more screen time.
Sure.
But look, check this out. You see this candle here?
Yep.
That follows a large move directly after.
Mm-hmm.
So now once you've spotted this candle, you can boom,
That's cool.
put a zone on the candle, right? Like draw like a little rectangle or whatever the hell you want to do. And then we get a move up back into the area, right? These orders trigger and we make a move back up.
Yeah, that's neat.
Right.
Okay.
And since it's on a smaller time frame, it's not going to be as strong. That's why you see after the first retest, you get the second one, you get a little move up, and then it gets invalidated, right? So then that's because it's on a smaller time frame. So you have to you have to know these things because since it's on a super small time frame, you don't expect it to last forever, right? But yeah. That's how that was the concept of the order block and fair value gap. That was why I took the first trade there.
Thank you for explaining.
Yeah, for sure. Put that if you have it, you're in the premium, so you can ask me questions at whatever point. So if you have any questions about it moving forward, just feel free to ask in the premium chat, or you could DM me directly. But I don't want to overload you with information. Like if you're doing really well already and you have a system that works, don't try to add like multiple new things. If you have something that works, just stick to it. But this is just more stuff you can learn about. So if you want to go back and do some back testing and try to find them on your chart, I'll help you out.
Thank you.
All right.
Maybe sometime you could do a class on order blocks, because I bet other people would be interested. Isn't that fairly important? I mean, that's also a fundamental of support and resistance or liquidity, isn't it?
Yeah.
These order blocks.
Yeah, 100%. It'll kind of fall in with the ICT concepts. So
yeah.
If I don't even know if there'd be enough like demand for an ICT class, but if it's there, I definitely would be down to do a class on those concepts. It'll kind of fall in there.
One thing I was wondering also about is sometimes you've talked about using moving averages on 15-minute charts. I think you use like 5 and 9, right? But what's your criteria? Because I was wondering today when you had that SPY trade. I was just looking for moving averages and things to understand what was logic. And how do you know? Like, did you go back and look at your 5 and 9 on the 15 on that? Because it clearly, I don't think we would have gone long, because I think the 15-minute bars were all red candles.
No, at that current time, the candle was just about to retest our EMAs. A 15-minute candle was retesting EMAs. Here, let me pull up the chart real quick.
Well, if it's retesting, then that's okay, right? Or no?
Yeah. So it was in confluence. So it was this candle here. So granted, today was more chop than anything else. So like, especially today, I didn't really focus too much on EMAs, because days like today are the days that EMAs are going to get completely invalidated. But yeah,
key also, that would have been, if you were using your 5 and 9 exponential moving averages, that would have been a great, we would actually bought puts there, correct? Or no, am I mistaken? Because the moving averages are stacked underneath each other, and you had a pullback.
No, so this candle went up and closed above EMAs. So what we're doing is we're looking for the next candle to come down and retest EMAs and then make a move back up, right? And then your stop is a close below EMAs, which we ended up getting.
Okay. All right.
Yep. Okay. So that was that. But yeah, you can see how like the EMAs they would have been super ineffective today, especially because of the way price was moving. I mean, days like today, if you see how 15-minute EMAs are kind of just getting invalidated left and like, look, we open up, just slice through them like they never were there. Then you do it once again, and then you do it once again, right? So within the first 30 minutes, we kind of just pretended EMAs weren't even there. So like at this point, I would go to a higher time frame and see what's going on. And you can see here, look at the bigger picture of what's going on. We're just getting EMA rejections, right, the whole time.
Got it.
So this was the open today, right? We opened up right in your EMA, in your hourly EMA. So that's like a no-brainer short up there. And then, you ride that down, and here's another pullback up to EMAs, right? You can ride that down. And then now we just closed in our EMAs again, right? So if tomorrow this opens up somewhere in this general area, you can pick up a higher probability short for a move back down, right? And, that would be higher probability than taking a long here. I personally, I wouldn't touch longs until we break EMAs. Kind of works out in my favor because this downtrend, the EMAs are stacked literally on the downtrend. So if the downtrend breaks, the EMA breaks, and then it's a higher probability long, right?
You're going to wait till we have a positive crossover on the EMAs before you do buy calls?
Nah, I don't wait for a crossover. I really just wait for a higher time. So like not really a 15. I would go to, like, if you really want to make sure that you're with the trend and not just take like a small day trade, I would go to the hourly. And if as soon as this hourly closes above my EMAs, I would be long on any pullback to EMAs. And that's just the system. Like there's EMA concepts out there like 9 and 21 that require a crossover. With these, you don't need a crossover. This is just, you get a close over and then you buy the pullback, and that's it. It's really simple.
Okay, I didn't know that. Thanks.
Yep. Can you talk about all the indicators you use? Yeah, we kind of just did. Just volume, 5 and 9 EMAs, and then the strat assistance is kind of just there just so I can see all the time frames without having to switch through them. I got to find out how I can share this indicator with you, because I really have no clue how you share an indicator. Like, I have no clue how you do it on TradingView. Maybe somebody knows that can direct me to that, but I have no clue. All right. You searching? No, because this is actually a private indicator. So like, it's not like public. So like, you won't be able to find it there, but it's right here. There.
It's
We'll figure it out.
You can just if you go on TradingView, just show the Pine editor. Like those little brackets, and it'll show the code. Yeah, and you can share that, and they can just paste it in their Pine editor, and then that's the code right there.
Just fucking copy this entire thing.
Yeah.
All right. Copy. All right. I'm gonna DM it to you. There you go. All right. So there's that. When you trade during the day, what time frames are your go-to? 2 minute, 5 minute, 15 minute? So I have 2 different layouts up on my monitors when I'm trading. So my one layout is this right here, what you see, which is mostly always on a 15 minute. And then occasionally I will bump it up to a 30 and then hourly for the bigger picture. And then my other layout looks like the one we were looking at earlier. Let me pull that up. That is for ICT. So I'll draw out all my ICT concepts on here. So in the morning I'll have buy side liquidity, sell side liquidity, like whatever. I'll start off on a 5, and then with this setup, you're going down time frames. So you start off with a 5, and then you go to a 3, 2, and a 1. Can you DM? You know what? I'll put the indicator in here so you guys can copy this. That's holy shit. That's a lot. All right. Well, there's that. I'm gonna delete that. I'm definitely not keeping that up. So if somebody wants that, you guys should copy it now.
Not sure how to do that.
All right. Oh, Wave's in here. No, Wave. What's up, bro?
What's up, guys?
How's it going, man? How you doing?
I'm good. How are you? Dude, I saw your thing on Twitter and I was like, thought I'd jump in.
Yeah, bro.
See what's
Dude,
going on.
Weren't you in fucking Wise Guy too?
Yeah.
Yeah, dude. Those
Yeah,
fucking good old days, bro.
Dude, that was like when everybody was like, I'm not even gonna lie. When I was alerting in that Discord, I had no fucking clue what I was doing, dude.
Bro, I was